Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly talk about Air Canada stock. This was one of the most requested stocks to review by reviewers of the channel, and what you will see in this video is a little bit different from my previous stock analysis videos. When I review a stock, I usually discuss their business, the future plans, the dividend, the risk associated with the company, and finally I will usually provide you with a detailed stock analysis using my personal discounted future earnings model or discounted future cash flow model. However, with Air Canada, I cannot really do that because of the reasons I previously mentioned in this comment. It's hard to evaluate a business like Air Canada, which has negative cash flow, huge debt, and close to zero equity. It trades purely based on momentum and not fundamentals. To clarify my stand about Air Canada in this video, I will quickly look at their balance sheet and their valuations based on the business fundamentals. Air Canada shares are traded on TSX for almost 21.5 Canadian dollar at the time of recording this video, and the market capitalization of the company is around 7.7 billion Canadian dollar. This is an important number because we ideally want to pay a reasonable price for the stock, and this reasonable price should be the present value of all the future cash flow generated by this company. And in this video, I will show you there is no future positive cash flow with Air Canada for a very long term. And that's why if you invest in Air Canada, the risk you are taking on is much larger than potential rewards. And that's why I don't like investing in a company like Air Canada. They are pretty much burning cash to stay alive. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. A lot of new investors think Air Canada will do great as the pandemic is over and people are flying again and spending on travel. That's true. People are traveling again and spending money. But the problem is, Air Canada was not an attractive business with large margin of safety even before COVID. Air Canada or airline businesses in general they are not really profitable businesses even during the good times. They have extremely low profit margins and high capital expenditures. For example, even before pandemic, Air Canada did not have a good growth rate in its cash flow and EPS numbers. It was up and down depending on the year and growing slowly by raising debt. It was an okay company, okay business, but not a great one. With Air Canada, the pandemic effect was a disaster for the balance sheet. It went from an okay company to a company close to the bankruptcy, with huge amount of debt, negative cash flow, and almost zero shareholders' equity. It means you are paying to own a part of the $7.7 billion market capitalization of the company, in which it has no equity and no positive income at all. It's not only the negative cash flow, debt, and lack of income. The Air Canada management diluted shareholders like there is no tomorrow during the pandemic. They issued a lot of new shares during this time to raise capital and money to continue their operations, which means if before pandemic you owned, for example, 10% of the business and you hold on to your shares during these difficult times, the management brings on new investors and now says you only own basically 5% of the business. Even if everything goes back to normal and even slightly better than normal, it takes many years for Air Canada to just clear its debt and be able to become profitable again and probably buy back the shares. And without the government bailout and loans, I think there is a serious risk of bankruptcy for the company in the coming years. Even if it goes back to pre-pandemic business standards, because of the share dilution, the share price cannot go back to $40 range anytime soon. I cannot really evaluate this stock because there is no fundamentals like cash flow, earnings, or even future potential growth rate. But of course, you can trade this stock based on momentum in the short term and make some money with this way. I'm not a trader and that's why I have no comment about trading Air Canada in the short term. In summary, I think Air Canada does not have any fundamental positive aspect other than the chance of bailout and basically lending by the government. If you want to trade Air Canada based on momentum and news, yes, you can make money with the stock that way, but in the long term, with respect to the fundamentals of the business, I prefer to put my money into casino than Air Canada stock, as the odds of winning in the casino in the long term is higher than winning with Air Canada as a business in the long term, again, in my opinion. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.